Ladies, smart women, we want you to get savvy with your money in your financial life. So, thank you for being on here today. And this is such a significant topic that we're going to be covering. So, before we get started, I would like for you to know a little bit about our Smart Women Savvy Money Group. And if this is the first time you've come to us to see us before, and hopefully it won't be the last time, we want you to know who we are and what we do. And we have been around and been very blessed. Our focus is not at the exclusion of men, that we focus on women. And we have an all-woman team. More to come. So with that said, you can also see all of our services that we provide. And our primary objective is to help you get savvy about your life. Today's topic is very relevant, but you can also, when you come to our site at Urban WM, you can come in to see a variety of blogs and all of our webinars that we have done in the past, which we've done since 2014. So there's a ton of different topics that you can see and check out. So when you come into the site, you can even select, when you see the recorded webinars, what topics do you want to focus on? Here, for example, today's topic is about real estate. And our speaker has been with us a couple of times on some very, very relevant topics. So she was with us in 2021 and in 2019, and here it is 2023. We also have a ton of blogs that will also be on a variety of topics as well. And this will help you to feel more confident about your life. It's just not about investing. It's about taxes. You definitely need to know about taxes. Also, how to take care of family members. What's the appropriate type of insurance coverages that you need to have, and employee benefits? What if you've lost a family member? What are some of the things that you need to be prepared for? And you just got married. What are some of the things that you need to know about? There's a variety of topics that all as women need to be knowledgeable about, because we are all multitaskers. And because of all the things that we do, it's very helpful to have that background. So with that said, I want to get started and let you know what and who is going to be speaking. Tia Hughes. Tia began her real estate journey as an investor, and her enthusiasm hasn't waned out since. She's purchased and managed rental properties soon after graduating from college. That's great, girl. Wonderful. She has expertise in tax accounting. Her professional background includes tax accounting and marketing. Her growing interest as an investor led her to a position as a project manager for a real estate company that sponsored tenant and common investments. There, she also did asset and property management, as well as acquisitions and dispositions for the company's portfolios. Her tax accounting background served her well, with a strong foundation in financial analysis, an important ingredient for real estate transactions. So very true. So she made a step into the residential real estate career, which began at Coldwell Banker Residential Brokerage, where she built a foundation of strong relationships with clients and the realtor community. She was recognized as a member of the Coldwell Banker International Sterling Society for outstanding performance in 2012. She then moved to Rodeo Realty, where she displayed an excellent program for serving her clients, and she was admitted to their executive club for her 2013 achievements. She has since transitioned to Compass, where she helps sellers reach their end goal and guides buyers through their real estate transactions. She believes that matching buyers and sellers creates a win-win scenario for all. So, since she currently works in investment real estate, She specializes in multifamily sales. This is a very important topic, as we know today, because real estate is in a stage right now where a lot of people have a lot of questions. She has got the answers for you. So, with that said, turn it over to you, Tia.
Thank you, Renee, for that introduction. And hello, everyone out there. Happy to be with you on this lovely day. I'm here in California, but happy to be with you all virtually across the country. So I'm going to share my screen so that we can get started. The title of my presentation today is it the right time to make a move? Navigating the real estate market in 2023. And with this presentation, I wanted to give everyone a very current snapshot of where we are in the market, some of the trends that we've seen, and just inform you guys with information so that you can make better decisions if you're looking to buy, sell, invest in real estate. You'll have that information to do so successfully. So Max Dupree, he wrote a book. He's the author of a book called Leadership is an Art. And a quote from that book that I liked was, "The first responsibility of a leader is to define reality." And that's what I want to do here with you guys today, is define reality, because I know we hear a lot of hoopla in the media, a lot of headlines about, prices have dropped, interest rates are up, a lot of different chatter, some true, some not as true. But I want to show you guys the actual numbers so that you have a concrete foundation of where things are. And if I were to pick a way to do that, it would be with this graph right here. So this is a chart of the 30-year fixed rate for 2023. So just starting back in January. And starting actually in the beginning of the year, things started off pretty good. But as we got more uncertain economic news, relative to inflation and other things, interest rates started to climb. And really that reaction that maybe we're not as far along in the fight against inflation as we thought, causing interest rates to fly. And so causing interest rate to rise, excuse me. So that's the main thing I want you guys to get from this slide, is that the interest rates are tied directly to inflation. As inflation goes up, interest rates go up. And as inflation goes down, interest rates go down. So you can see here at the beginning of the year, interest rates were, in the low to mid sixes, and buyer demand was pretty good. But as interest rates went up, or have gone up over the first quarter of the year, you can see that it's changed the buyer demand a bit. This next slide shows you the relationship of mortgage rates versus the 10-year Treasury yield, and you can see how closely the mortgage rates track the 10-year Treasury. So this is another metric just to kind of show you where we are starting from January of this year to current. So interest rates are going to typically follow the 10-year Treasury. There is a spread, but for the most part, it follows it. And the reason for that, we need to understand this quote I wanted to read to you guys of why we have this fluctuation. Oh, did I skip one? Okay, that's just the line showing the graph. So I want to share this quote with you from Sam Cater, chief economist, of Freddie Mac. He said the economy is showing signs of resilience, mainly due to consumer spending, and rates are increasing. Overall, housing costs are also increasing and therefore impacting inflation, which continues to persist. So here's a look back a little bit further, going back over the past 50 years, comparing the 30-year fixed mortgage rate versus the 10-year Treasury yield. And you can see that they have moved in unison, with the average spread between the two being 1.72. Now, if we look at more current times, again, starting from January of this year, you can see that that spread has increased to 2.7, almost a full point different. And what's the reason? You know, a lot of it is fear, you know, so as the interest rate goes up, it causes fear in the market. But there are options for people. So sometimes people, you know, are afraid of the higher interest rates because they think they can't, you know, afford the payment, or you know, maybe they're afraid of job loss, or for whatever reason, you know, they have some or some type of fear. But there are other options. You know, you can buy down your interest rate, you can get an adjustable rate. And, you know, you can just get creative with other ways of buying real estate, even with a larger spread. But the even bigger challenge that I wanted to talk to you guys about today is inventory in our markets. And here is a chart showing you guys the US total listing count, starting from January 17 to current. And you'll notice this red line I just popped up. The big change starting from COVID, right? That's about spring of 2020. That's when we started to see a drop in inventory across the country. That's when people were, you know, making moves. They had different needs in terms of their housing. They needed more space. They needed you know, home office, they needed a gym in the home. That's when everybody was doing everything out of their home and their needs changed, and people were, you know, getting out there, getting very competitive and depleting the inventory, buying up real estate during that time, which I'm sure you guys remember. So this chart, while the number of homes for sale is increasing, it is still 47.4% lower than it was before the pandemic in 2017 to 2019, as you can see. So the last few years, 2021, 22, and 23, you know, we've seen a slight increase year over year, but going back to times before that, looking at the last 7 Februarys, you can see that our inventory levels were a lot higher. So that has also caused an impact on our market. And then looking at the change month over month in inventory across the country, no matter where you are, you can have a glimpse into where your country, I'm sorry, where your state is doing. Overall, everyone is, you know, up to 15% down in terms of inventory. You know, from California, where I'm at, we're down about 8% month over month, you know, all the way over to North Carolina, down 8.3%. And another reason for this next chart shows single family housing units completed, is just the lack of building as well. So you can see the last 14 years in the red straight, we're below the 52 year average of new homes being built. So that drop in, you know, homes being built, coupled with the inventory being depleted during COVID, we still haven't caught up with our inventory numbers. So simple, you know, supply and demand, there are more people wanting properties than properties that are available. Okay, and then this dot across just shows you the average going over the past 50 years or so. And we have these numbers as well. Housing market short, in terms of millions of homes from various sites. And yes, the numbers vary from source to source, but the commonality here is everyone is showing that we are down in terms of inventory, and that there are just not enough homes on the market currently. And then another question that we get a lot is, you know, have home prices fallen? So this will answer that question for you. How much have home prices fallen from the peak? So this is the drop in home values since the June peak through December of 2020. So according to these 3 sources, we're looking at anywhere from 1 to, let's say, 2.7%. So not this, oh, properties have lost 20% in value, 20% loss in equity that you may have seen, like I said, in some headlines. The average has been, closer to 1 to 3%, which isn't that bad in my opinion. So the question, should I buy? Is now a right time to buy? You have to ask that question to yourself before making a move, right? So sometimes people are thinking, is it cheaper to rent or should I buy? And let's analyze that. So the one thing I can tell you for sure is that the median asking rent has done nothing but gone up since 1988. So no matter where you are, even if you're in a rent controlled area, the landlord's typically going to try to raise the rent whenever they can. So the good thing about having a mortgage or a home, a property, is that your mortgage payment stays the same, right? If you get a 30-year fixed, especially, that brings you stability in terms of your housing costs, the roof over your head, what your payment's going to be, every month. And if interest rates do go down, you can always refinance into an even lower payment. Whereas rent, rents are constantly going up. I just had a client contact me recently. She's an attorney and she needs to move because she was renting an apartment and the landlord wants to move her mother into that unit. So she's being displaced, for that. So you don't have as much control over your housing when you're renting versus a property owner. So this next chart shows estimated national price performance. So here it says that, we're slated for a slight decrease in 2023 of under 2% in terms of pricing going down, but then a rebound, starting from 2024 and on. Now, the one thing that I will say about this 1 year of 2023 is you got to look at supply and demand, right? So if people see that buyers are on the sidelines, waiting for interest rates to go down, prices to go down, or whatnot, people will see that opportunity, right? Seeing that there's less competition and jump in. So even with this projected decrease in 2023, it's possible for that to change. I've actually just experienced that personally, had some clients that were casually looking over the past, 2 years. And yes, 2 years, right? And getting, outbid and, all cash buyers. And they started looking around, the pandemic time, so maybe even longer than 2 years. And they saw that the market had calmed down a bit and they jumped in and we submitted, a competitive offer on a property. And what do you know? They got it. So that, void creates, opportunity, and it causes people to jump back in the market. So here shows percentage change in home prices across the country. So the national average, and this is from Q1 1991 to Q4 of 2022, looking at the long run. Most people, are in their homes for, years on years. And over the long run, you can't lose in real estate. You can see appreciation since 1991 is anywhere from 100 to 500%. We see 300% increase in California here. So over the long run, you're building equity, with owning a home. And here shows potential growth in household wealth from equity over the next 5 years, based solely on increased home equity if you purchased a $400,000 home in January of 2023. And yes, there are probably not very many $400,000 homes here, but adjust for your area. This is just an example based on national averages. You're looking at continual increase over the next 5 years, with the total projected increase in wealth or equity being $54,000. So bottom line here is home ownership will always, win in the long run, especially if you're planning to be in your home, 5, 10, 15 years. But obviously you have to do what works for you at this current time and what makes the most sense for you financially, and make that decision based on your local market. And then for more information, here's some of my contact information, my website, email, phone number, and please follow me on social media for more information as well. And I'll turn it back over to you, Renee.
Awesome. Very, very important info that we all need to know. That was phenomenal to see what the significant changes have been in the the rates on these homes, and the
Yes.
fact that and thank you so much for actually showing that what the current situation is with interest rates and how that's impacting it. And so, because that certainly has made a big impact on mortgages. And so, I get all these phone calls, and I know a number of my friends have said they've been getting these calls saying that they're auto calls and essentially saying, if you're interested in selling your home or if you want to know what the value of your home is. And I'm like, why? I guess because no one wants to sell their homes at
Right,
this
which goes
point.
back to the point I was making about inventory. Low
Yeah.
inventory. Yes,
Oh,
yeah,
yeah.
exactly right.
So it's like that all across the country. Nobody's really wanting to sell. So even if you do sell, and based on the fact that the sales of homes are down, does that mean that the pricing of the homes have gone up because it's a limited amount of homes that are available for sale?
Yeah, you're just saying simple supply and demand. Yeah, so it really depends neighborhood by neighborhood, as you know. So yeah, in general, yes, when there's less inventory, there's greater demand because it's less homes for people to choose from. So if people are targeting a certain, neighborhood and there's only, I don't know, 100 homes for sale, there's 150 buyers, looking in the area, that's going to create some price competition, right? So the key is with that is, pricing your home correctly when you come on the market. Don't, try to be too ambitious because, okay, hey, I know it's low inventory, people are still pretty savvy when they're buying a home and they're going to look at the comparable sales of what sold recently in your neighborhood. But price ambitiously so that you get the attention of the buyers, and then you create your own natural price increase through competition.
Mm. But even though mortgage rates are up, you still think that there's a significant amount of interest in purchasing properties, even though they're up higher, and of course the mortgage rates are higher, that there still are folks that want to step in. And
Yeah. I mean, they're higher, but it's relative, right? I mean, back in the day, interest rates were in the double digits, right? So I think we got spoiled with interest rates being in the high twos, low threes, kind of starting at the pandemic, and we kind of are using that as our frame of reference. But even now, with interest rates being, let's say, in the sixes, sevens, it's still relatively low when you think about people who had a 13% interest rate, when they purchased their home. And you can always refinance. That's why I tell people, if let's say you buy now, but you're worried about interest rates, if they do go down, you can refinance, into a lower rate.
yeah, that's a good thought. Very good thought. So, can you also share some insight about those people who might be first time home buyers and what are the special rules that they can take advantage of from their county, certain banks, etc.?
Yeah, I would say definitely connect with a local expert, local realtor, that will have a broad knowledge of programs available in your area. But there are a lot of banks, for instance, Bank of America, and I only can speak for what they're offering here in California. But they have a community affordable program where they're helping people to get into homes in certain communities with zero money down, no money down program. So a lot of banks have, various programs, for teachers, for law enforcement, for doctors. And if you don't fall under, any of those special professions, there's even just the standard FHA loan, which, allows you to get in a home with only 3.5% down payment, which is a popular option, for most first time buyers.
Yeah, that is really, really important. That people really do need to know what is the best means of purchasing some property with only a small amount down.
Right.
A lot of times they're requiring, significantly more as the down payment. So
Right.
that's
Right. Yeah, you don't
that's
have to have the 20%, obviously the more you put down, the lower your monthly payment's going to be, but I always tell people your first home is not your last. You use your first home as your stepping stone just to get into the market, build equity, and then you can sell that home in 5, 7 years, cash out and then trade up to your next bigger home. You'll have some equity that you can, pull out and cash out on to use as your down payment towards your next home.
okay. Wow. Last question that I have for you though. Let's say, for people that and we have a number of clients and have some friends who have their own homes and then they're buying a second one basically as a vacation home.
Mhm.
And when they do that, because sometimes they'll ask the question, well, if I get this second home, does it make sense for me to rent out my home while I'm in my vacation home? What are your thoughts about that? Does that make sense to do, or just maintain those, your homes because you don't maybe want to have somebody that's renting out your place like an Airbnb or something
Mhm.
like that?
Right.
What do you find that most of your clients do if they have a secondary vacation spot?
Yeah, so for the secondary vacation spot, it is a popular option to do short-term rentals there, like Airbnb and whatnot while you're not there. Some people, if they can afford it and, they don't really, the extra income from Airbnb doesn't really sway them one way or the other. They just keep it vacant until they're ready to go. So it's always available for their personal use. But if you're looking, to help offset the mortgage or you're just looking to have a little bit of extra cash flow, I think Airbnb is a good option for that. You just have to check the local restrictions in whatever area your secondary property is to make sure you're following the rules there. But I do think it's a good option to use short-term rentals as a supplement when you're not in the property.
Okay, very good. Awesome. All right. Well, thank you so much for all of your amazing insight. Great, great thoughts and ideas about not just real estate, but mortgages, the best way to purchase, what the interest rates are. And as you say, going into 2024, we will start to see a shift and a change in not only the mortgage rates, but also, what the property values are. And
Exactly.
that's good to know for anybody who is stepping in and wants to buy the
Hmm.
property. So, what I have been recommending to a number of, especially the younger clients, is you better wait till towards the end of this year, when we start to see rates go down a bit, and also provide them with that opportunity since they're first time home buyers, what those steps are. So,
Hmm.
those two combined will give them an opportunity to really put a lot less down initially and take advantage of the rate. And you're very good point because I do remember how high we had those double digit
Right.
mortgage rates, but still, even if we're at 6 or 7 or even 8%, that's a lot less than that 12, 13, 14%
Right.
that,
Right.
even 10% that we
Right,
experienced
right,
years
the double
ago.
digits,
Yeah,
yes.
exactly. So very good. Thank you so much, my dear.
Of
And
course, thanks for having me.
yes, thank you for sharing all of your amazing insight.
Happy to.
All right. Very good.